AMP, let me put you on the spot now. So, everyone's been coming out for a long time now saying when they expect interest rates the official rate to start to fall, I'm making the obvious assumption that, for example, mortgage rates will fall as well. But let's assume that is the case. Convention sort of dictates that anyway. When is the AMP's view on when interest rates may start to fall and by how much and by how many?
I think that we'll get faster decreases in interest rates here than where most people are expecting it to. And
when it happens, you mean?
When it happens, and also faster compared to some of our global peers. So our official view has been that we'll start cutting interest rates in June in Australia. That's probably too soon though, based on the labour force figures today. I think that the RBA doesn't want to be in a rush to cut interest rates right now. But if it's not June, then I think it will be August or September, and we'll get probably 2 by the end of this year. A lot of people have been pushing back their expectations now for interest rate cuts, both here and in the US. I mean, the US has really been one of the, leading drivers for pushing back some of those rate cut expectations, because the CPI in the US has been surprising to the upside for the past 3 months. People are worried that we're in this situation where inflation is going to start surprising into the upside. I think Australia is in a very different situation, though. We have to remember that interest rate hikes work differently in Australia compared to the US. People can fix their mortgage for 30 years in the US. In Australia...
And most of them are.
And most of them are. The increase in outstanding mortgage rates in the US has been like 0.5 percentage points, even though the Fed has raised rates by more than 5%. Whereas in Australia, we've had 75% pass through to our outstanding mortgage rates because people are on variable rates here or short-term fixed rates. A lot of those people who are on fixed are now rolling off those rates. So our consumer is in a much weaker state compared to the US. The US consumer, I think that this is just a case of US exceptionalism, if you want to call it that at the moment. The US is in a different situation to pretty much every other major advanced economy at the moment, like Australia, Canada, New Zealand, the UK, and other countries in Europe. All of those countries are closer to cutting interest rates than the US. So
if I was to put you on the spot, which I'm going to, because, that's what listeners want to know, when would mortgage brokers and people operating in the mortgage market sort of expect, I know you said you were June, but expect to see rate reductions, say, hopefully this year? Do you say second half of this year?
I think August or September.
Second half of this year.
The second half of this year, I'd say probably 2 interest rate cuts by the end of this year. So the cash rate will still be at a high level.
Yeah. But it'd be like 385 or something like that.
That's right.
So you're talking about 225 basis point reductions.
225 basis point cuts,
But what is there one particular indicator that, I know that the CPI number's coming out later this month, but is there one particular thing that you guys are looking at AMP? Where's one number that really, really important to you that you're hanging out to see?
CPI. It's always, at the moment, it's a CPI. That's what every central bank is worried about. The reason that the US is pushing back now their expectations for cuts is that they're too worried about the CPI data. But, so a lot of people are saying that in the US, they will still cut interest rates before the election in November in the US because Powell is adamant to keep Trump out of office. I think that that's really interesting. And Powell has sort of, he's had a lot of hawkish co-workers from the Fed talking about the need to not even potentially cut this year, whereas Powell has sort of been saying, we'll see how it goes. So I think that the Fed, to me, and Powell in particular, seems like he does want to cut interest rates soon, but the inflation data is just not allowing them to get there. So I still think that we will see some cuts from the US Fed before the election.
So we've got an election here in Australia in 2025, sometime after March or something like that. And we've definitely got one budget coming up, but we potentially could have another budget before the election in 2025. And I know we've got an independent reserve board, but clearly, there's expectations or hopes of politicians because everybody wants to get voted back in. What do you think our politicians would be hoping for in terms of elections? I'm talking about the incumbent. I'm talking about the Labor Party, federally.
Federally here. Well, at the moment, I'd say that even though Labor's polling hasn't been particularly strong from consumer or household point of view in the past few months, at the moment I think that the Labor Party still has the stronger policies to take to the election. I'm not really sure what the coalition what kind of policies they're debating that they would take to the election right now. I think Labor has still tried to go ahead with their climate policies, and they do still despite the negative polling, I think that they have done all right, really.
And what do you think they're expecting? What would they be looking for from our Reserve Bank governor? Would they like to see some rate reductions or hold the line?
They would, because that always helps the electorate, and people would always feel better when there's rate cuts, because we see that in the sentiment data.
Yeah.
It's evident. But what I think households are really hoping for, lower inflation and higher real wages growth. That has been the key negative for consumer sentiment. If you look at our sentiment numbers, they're at recessionary-like levels still. Yeah. Despite the fact that Australia's done pretty well, really, given the fact that we've had all these rate rises and that the labour market's still in such a good position, people are still feeling pretty depressed about things, I think, because their wages haven't kept up with inflation. And you don't, as an economist, you don't really want to see wages keep up with inflation, because then you can get into this spiral where wages growth is too high and you keep on getting high inflation. The RBA has to raise rates more. So the fact that we're getting inflation down is really positive. I think that will help consumers by the end of this year. And the government is also banking on the high commodity prices that we've had in the past few years to give them some money back, to be able to give some cost of living relief in the budget. I think that will be a key part of the budget again.
Yeah, in that, the commodity prices actually reap in a lot more tax, which allows the budget to become closer to being balanced.
The budget will probably be in a surplus this year again.
You think?
And I think that they'll give some of that money back to households. Not too much, because they would be worried about contributing to inflation, because don't forget, we also have the stage 3 tax cuts coming in from the 1st of July, which have now been transferred from the high income earners to the middle income earners, or middle and high, I should say. And I mean, I think the impact will pretty much be neutral once you kind of look at all the pluses and minuses for households at the moment. But I think the government will be worried that they don't want to seem to be adding to inflationary pressures when the RBA has been doing all the hard lifting in terms of getting inflation down, and the government's kind of been on a spend-a-thon in the past few years. Yeah,
and I can sort of understand what they did during COVID. But
now looking back, you can see that it was just way too much. Yeah,
in error. But no one would have known at the time, I don't think, because everyone around the whole world was doing exactly the same things. So do you feel if you're going to give the current RBA a score, how do you reckon they're going?
I'd probably say a 6.5 out of 10.
In terms of management
of the economy. I mean, there's no need for them to cut rates right now. I would like to see some more forward guidance from them, though. I think the other central banks like the Fed do a better job in terms of forward guidance, and I understand maybe why Michelle Bullock is hesitant to go down the path of giving specific forward guidance, why she said we're not ruling anything in or out, but I don't even know what that means myself. No. And for the normal person on the street, I just don't think it's clear enough, whereas the US Fed, I think, has really good communication tools in place, and everyone kind of understands what they're trying to do. I think that people don't really understand what the RBA is doing.
So do you think that this new process of her having a 1-hour press conference immediately after the RBA decision at 2:31, whatever time it is they put it out, do you think that that's not really achieving the outcome that the new regime is designed it to achieve? In other words, more disclosure.
I was always a bit skeptical about the new management of the RBA, I suppose, or what they were trying to achieve, because in my eyes, they had lots of communication already coming out from speeches. And now the fact that they've had this press conference, they don't do any speeches anymore. So the speeches were a way for the top leaders at the RBA and the governor to talk about the major issues. But now, because they have this press conference, they feel like they don't really need to do that anymore. And I don't really think we've got anything. I mean, it's only been a few months where we've had this new structure. Maybe we need to wait a bit longer, but I don't think we've seen any improvement in management of the economy or communication from the RBA just because this press conference. I sort of think it's added to confusion, because your words can get tangled when you're doing a 1-hour press conference, and the tone at the press conference can sometimes be different to the post-meeting statement and then to the RBA minutes, which come out 2 weeks later.